There was no explosion, no sirens, no warning on the news. On the morning the global financial system cracked, people still went to work, coffee was poured, emails were sent, meetings began like any other day. And yet, somewhere deep inside the system, one decision had already started a chain reaction that would erase trillions of dollars and change how money works forever. This isn't a story about greed. It's not even a story about failure. It's a story about how confidence breaks and how one man's decision revealed a system far more fragile than anyone wanted to believe. Before the crash, Lehman Brothers was not a risky bank. It was a pillar. Founded in 1850, Lehman survived civil wars, depressions, and 2 world wars. By the early 2000s, Lehman Brothers wasn't just respected, it was trusted. Governments trusted it, investors trusted it, other banks trusted it. And at the center of this institution stood its CEO, Dick Fuld. Inside Wall Street, he had a nickname, the Gorilla, not because he was reckless, but because he was aggressive, confident, and absolutely certain that Lehman Brothers would never fall. And for a long time, he was right. In the early 2000s, America had a belief that housing prices never go down. Homes weren't just places to live anymore. They became investments, assets, promises of future wealth. Banks didn't want to miss this. Neither did Lehman. So Lehman made a decision, not illegal, not secret, not insane at the time. They went all in on real estate, mortgage-backed securities, housing-linked assets, complex financial products that promised safety through diversification. On paper, it was brilliant. Why worry about one loan failing when thousands were bundled together? Risk didn't disappear, it was spread, or so everyone believed. And Dick Fuld believed something even more dangerous, that Lehman was too important to fail. By 2007, the cracks began to show. Not loudly, quietly. A few missed payments here, a slowing housing market there. Nothing dramatic. But inside Lehman, some executives were nervous. They suggested pulling back, reducing exposure, raising more capital. Dick Fuld refused. To him, stepping back looked like weakness, and weakness on Wall Street is contagious. He believed the market would recover, that confidence would return, and more importantly, that if things ever got truly bad, someone would step in. After all, they always had before. Here's the part most people misunderstand. Markets don't collapse when money disappears. They collapse when belief disappears. In 2008, Lehman Brothers still had assets, still had employees, still had deals in progress. But trust? That was evaporating. Rumors spread faster than facts. Investors began asking questions. Counterparties hesitated. And once doubt enters the system, logic stops working. Because finance is not just math, it's psychology. And psychology doesn't wait for balance sheets. September 2008. Lehman needed help. Other banks were saved. Governments stepped in. Deals were made behind closed doors. But Lehman was allowed to fail. Not because it was the worst, but because it was the one nobody agreed to save. Dick Fuld waited, believing a rescue would come. It didn't. When Lehman Brothers collapsed, it wasn't just a company going bankrupt. It was the moment the world realized the system had no safety net. Markets froze, credit stopped, fear spread globally. One decision didn't cause the crash, but it pulled the final thread. It's tempting to blame Dick Fuld, to point at one man and say, "There, that's the villain." But that misses the truth. The system rewarded his behavior, encouraged it, protected it, until it didn't. Lehman wasn't unique. It was a mirror. showing us what happens when confidence replaces caution and complexity hides risk. The crash wasn't loud. It was quiet, sudden, and irreversible, just like most financial disasters. Today, the buildings still stand. Markets still open. Money still moves. But the lesson remains. Financial systems don't fail overnight. They fail slowly, and then all at once. The question isn't whether another crisis will come. It's whether we'll recognize the moment before confidence breaks again. Because history doesn't repeat itself, but it rhymes. And when it does, it rarely knocks before entering.